Opendoor has just delivered one of the most important milestones in its history, and I believe this rally is only getting started. On Friday, the stock surged 40% in a single day to close at $5.01 per share, its highest close in 3 years. That number alone is a landmark, but what matters even more is what it tells us about the state of this stock, the conviction of its investors, and the road ahead. And for me, the takeaway is clear: the rally isn't done. I think Opendoor is set to carry this momentum into Monday's trade and potentially lead the market in the week ahead. Let's start with the price action itself, because it speaks volumes. Friday wasn't just a lucky spike. After climbing 40% in the regular session, Opendoor still managed to add another 19 cents in the aftermarket. That tells us that buying demand hasn't dried up, that even after such a massive move, investors are still willing to step in. In fact, that after-hour strength may be the clearest signal yet that when Monday morning comes around, Opendoor will open with conviction and potentially keep pressing higher. In trading, momentum matters, and Opendoor has it in spades right now. Now, of course, some people are already speculating about profit-taking. And yes, after a 40% day, it's natural to expect some traders to lock in gains. But I think any pullbacks that do happen will be short-lived. Why? Because retail conviction around this stock is extraordinary right now. Every dip we've seen over the past 2 weeks has been met with fresh buying. The social media chatter is constant, and the community around Opendoor is not just trading the stock, they're actively building its narrative. That's not something that fades easily. It's sticky, it's self-reinforcing, and it's what gives me confidence that the rally has legs. The timing of all this couldn't be better. Jerome Powell's comments at the Jackson Hole Symposium provided the macro spark that this fire needed. By signaling that rate cuts are likely in September, Powell shifted the entire market conversation. Housing, which has been under pressure for months thanks to high mortgage rates, suddenly looks ready for a rebound. Lower borrowing costs bring more buyers into the market, encourage more sellers to list their homes, and increase transaction activity. And for a company like Opendoor, which thrives on volume and efficiency, that's about as good as it gets. So the macro backdrop is now working with Opendoor, not against it, and that's a major reason why this rally could extend through next week and beyond. But while Powell's words created the tailwind, the heart of this movement is retail energy. Eric Jackson has been at the center of that, spending 5 days outside of Drake's mansion in Toronto with a sign urging the rapper to invest $100 million into Opendoor. On the surface, it's a stunt. But in reality, it's brilliant. It's kept Opendoor in the headlines, it's created viral moments on social media, and it even landed Jackson on Fox Business, where he repeated the pitch and got the anchors laughing. That kind of cultural crossover is rare in markets, and it shows how retail is not just investing in Opendoor, but actively amplifying it. Anthony Pompliano has described this dynamic perfectly. He's called retail investors a decentralized hedge fund, a hive mind of individuals pooling their conviction and their ideas to push not only the stock but the company itself forward. He's even gathering shareholder suggestions to present directly to Opendoor's board. That means retail isn't just buying stock and hoping for the best, they're shaping the strategy, giving feedback, and inserting themselves into the future of the business. That's new. That's powerful. And that's another reason why I think this rally has staying power. Now let's talk about the vision for Opendoor itself, because this is where the story gets even more compelling. Eric Jackson, in a more serious moment on the rundown, made an argument that really resonated with me. He pointed out that unlike Zillow and other real estate marketplaces that rely on selling ads to agents, Opendoor starts with the seller. And without sellers, there is no real estate market. By focusing on the seller side of the equation, Opendoor has the chance to reshape the dynamics of housing transactions. To me, this is where Opendoor could truly become disruptive. Think about Uber. Think about Airbnb. Both companies redefine their industries by focusing on the supply side, drivers and hosts, and building platforms that connected that supply with demand more efficiently than ever before. Opendoor has the potential to do the same thing in housing. By putting sellers first, by owning the transaction, and by building a platform that makes selling a home as seamless as possible, it could become the Uber or Airbnb of real estate. And while I think the company has already started taking steps in that direction, I also think the market hasn't fully recognized just how transformative this approach could be. Layer on top of that the company's pivot to artificial intelligence, and you start to see the outline of something bigger. Acting CEO Srisha Radhakrishna has declared that AI will be a core primitive for Opendoor going forward. He admitted that he used to be skeptical, But after seeing tools like Repair Copilot, Risk AI, and the Key Agent app built and deployed in just weeks, he's convinced. And he should be. These aren't gimmicks. They're practical tools that reduce costs, speed up processes, and make the company more efficient. They make the business model leaner, more scalable, and more capable of becoming that platform leader I just described. So you've got a company that's redefining the marketplace by focusing on sellers. You've got a leadership team embracing AI to make the business faster and smarter. You've got a retail community acting like a decentralized hedge fund, shaping the narrative and amplifying the brand. And you've got a macro backdrop where rate cuts are on the horizon and housing activity is poised to rebound. Put all of that together, and you've got one of the most compelling bullish setups in the market right now. Of course, we can't ignore the short interest. Opendoor is still heavily shorted, and that creates a powder keg. Every leg higher forces shorts to reconsider, and if we get a clean run above $5 with volume, that covering could add fuel to the rally. That's how you get the kind of sharp, extended moves that leave people stunned. It's not just about buyers stepping in, it's about shorts being forced out. And with retail conviction this strong, that dynamic is absolutely in play. There's also the possibility of institutional validation. Reports of conversations with Korean institutional investors hint that bigger players are starting to take notice. If and when that capital comes in, it will provide depth and stability that makes this movement even harder to dismiss. Retail energy can get things started, but institutional backing can sustain it. And Opendoor may be on the verge of combining both. So as we head into Monday's pre-market, here's how I see it. Friday's breakout above $5 wasn't the end of the story, it was the beginning of a new chapter. The aftermarket strength tells me buyers are still hungry. The retail energy tells me dips will be bought. The macro backdrop tells me housing activity is about to pick up. And the business model evolution tells me Opendoor has a long runway of growth ahead. Profit-taking may happen in the short term, but I believe the momentum, the conviction, and the catalysts are too strong for this rally to stop here. To me, the $5 level is now the battleground. If Opendoor can hold above that, it establishes a new base of support and sets the stage for higher highs. The short squeeze potential, the institutional conversations, and the ongoing cultural buzz all add to the fuel. And when you zoom out, the bigger vision of Opendoor as a seller-first, AI-powered, disruptive platform makes the long-term case even stronger. So as Monday approaches, I'm bullish. I think Opendoor isn't just breaking out, it's breaking into a whole new identity. The rally isn't done. In fact, it may just be beginning.